Hello, folks. It is October 1st, Sunday. It's almost noon on the East Coast of the United States. Let's talk about gold. What else do I ever talk about? Let me share my screen here and we'll jump right in. Here we go. I want to talk about two things in this video: the uses for gold, and then why buy gold and silver. And of course, when I say gold, I mean the precious metals, which in my mind, it's gold and silver. I don't give too much consideration to platinum or palladium. And actually, I favor silver over gold for what that's worth. So anyway, the uses for gold and the bullet points lay them out. Gold is money, a safe haven, a rescuer of the currency, the fiat currency, or the financial system. That's an important one. Inflation hedge, and of course, that's been historic. The precious metals have acted as an inflation hedge. Today, an ounce of gold is worth, I don't know what the price was Friday at the close, 1860, something like that. So basically, that's the entry-level Armani suit. So a man can go out today and for 1 ounce of gold, he can get him a fine or bespoke. That's the British term, a bespoke suit. It's the entry-level Armani suit, going to cost you about $1,800, 1 ounce of gold. You go all the way back to the 1920s, and it was the same thing. An ounce of gold was worth 35. Well, actually, at the time, it was worth $20, I think. But anyway, that same 1 ounce of gold would buy you a bespoke men's suit. And so inflation over the course of 100 years, gold has kept pace with inflation. So, and then the final use is as a weapon, and that's in the sense of a geopolitical financial weapon, one country against another. And we'll talk about that when we get to that slide. Okay, so let's start with gold as money. And this is the key point, in my opinion, is that gold as money is not going to happen by choice. There is no country, no central bank, no institution, nobody is going to choose gold as money because they aren't willing to constrain themselves to the discipline that gold as money requires. That gold as money means whatever currency, whether it's digital, paper, or actual gold. Well, actual gold is actual gold, obviously. But if we're talking about paper or digital currency, gold as money means that I can take that currency to my local bank and I can exchange it for physical gold. I can walk out the door with physical gold or physical silver or both. And again, no entity is going to impose that discipline on themselves by choice. And so when we're looking at, a forecast for gold, what is likely to happen with gold going forward, it isn't going to be gold as money by choice. In my opinion, we aren't going to see a common currency from the BRICS organization, although that's exactly what they were charged with developing. The financial ministers of BRICS were charged with developing and coming back to the 2024 BRICS summit with proposal format for a common BRICS currency. We've got 11 countries in BRICS now. What's the likelihood that 11 countries are going to come up with a format or a framework for a common currency that will work for all 11 of those countries? The likelihood just seems quite low to me. And I will point out that's exactly what Britain tried to do as they were losing, they were the world hegemon, and as they started to lose that status, they wanted to retain their control of having the world's reserve currency, the British pound, and they tried to introduce Bancor, bancors as a common currency, a settlement currency, and it failed. And then we currently have SDRs, which are special drawing rights. That's what SDR stands for. And I forget if it's the IMF or the BIS that backs these things, but the reason I don't know is because nobody cares. Nobody cares about SDRs. They exist. Yeah, some people still have them on their books as an asset. And yeah, any number of entities have SDRs on their books as assets, but nobody cares. Nobody knows about SDRs, no idea. And so historically, they will go the way of the bancor, just be another failed attempt at a common currency. And so anyway, I do not expect a common currency from the BRICS. If they do come out with something, at best it will be a settlement currency via the new development bank. Won't have any relevance to you and I as carriers of currency, the folding stuff that we currently have in our pockets and purses. Let's see. Gold-backed currency from China or Russia. In my opinion, these two countries are in the best position to introduce gold-backed currency. If either of those countries or the two countries together wanted to introduce a gold-backed currency, they could, but again, they aren't going to do it by choice, because they're not willing to, nobody is willing to incur on themselves the discipline that a gold-backed, gold as money requires. And so in my opinion, we're not going to see a gold-backed currency from either China or Russia unless and this is a likelihood, or at least a possibility that I have to consider, is that China or Russia or the two countries together may decide to implement a gold-backed currency because it hastens the demise of the US dollar, and not only the US dollar, but the entire Western financial system. If China and Russia got a wild hair up their tuchus and decided that they were ready to collapse the West in its entirety, basically throw the entire Western financial system and all of the Western fiat currencies into the dustbin of history, they could do so very quickly by introducing a gold-backed currency. One of the interesting things to note in this regard currently is that China is offering a $120 per ounce premium for gold over what's being offered in the West. And so basically, if you have an ounce of gold, you can take it to your local coin dealer and sell it for $18.60 or whatever spot price is, plus premium or minus premium if you're selling. Or you can take it to China and they'll give you $120 more, $120 extra for that same ounce of gold. And so anyway, by China offering this $120 premium, they are setting up a dynamic where gold, physical gold, will flow from the West to the East. Basically, gold's going to flow into China as a form of arbitrage as people take advantage of that $120 premium. And so, China, the gold analysts have been talking for years about physical gold flowing from the West to the East. And this premium is a new thing that will accelerate that trend, in my opinion. So gold will flow, physical gold will flow to China even faster now than it had been in the past. When I think about this, that in my opinion, we're not going to get a common currency from BRICS, I have to also think about, well, what is BRICS without a common currency? What is their reason for existence if they're not going to come up with a common currency? And so that's still an open question in my mind at this point. I've got some thoughts on it, but I don't want to belabor this video. Let's keep rolling here. So gold as a safe haven. Obviously, we're experiencing higher interest rates currently, and higher interest rates typically mean lower stock markets. When investors can put their money into debt instruments, and in particular, U.S. Treasuries, U.S. Treasuries are considered risk-free assets. And of course, I don't agree with that opinion, but if you ask financial advisors and investment advisors, what they will tell you is that U.S. Treasuries are risk-free investments. And if you look at the way internationally banks are allowed to count assets on their books, there again, U.S. Treasuries are considered risk-free. They're officially called Tier 1 assets. So U.S. Treasuries are Tier 1 assets in the banking industry. And with the Basel III agreement that's currently in effect, gold is also a Tier 1 asset. And so there are only two Tier 1 assets in the banking industry. It's U.S. Treasuries and physical gold. And so and just as a tangential point, up until I think it was 2021, when the Basel III fully went into effect. Prior to that, banks were only allowed to count 50% of the value of the physical gold that they held. So if they had 100 tons of physical gold held in their reserves, they could only count 50 tons as a bank asset in their official reserves. And so Basel III now allows them to count all of their physical gold as Tier 1 assets. And so anyway, so higher interest rates suggest that stocks are going to head lower. Investors are not going to let their money sit in stocks, which have risk, when they can have less or zero risk by putting the same money into debt instruments. And of course, you know, you and I, we understand that the risk in any debt instrument at this point is actually quite high. We're in the midst of a global debt collapse, and money is flowing out of debt instruments. That's one of the reasons that interest rates are rising. Higher interest rates also suggest that real estate will head lower, both commercial and residential real estate, just because the cost of ownership increases. The higher interest rates go, the more it costs to own real estate. You know, currently we've got 8% mortgages for a residential fixed rate, a 30-year fixed rate mortgage, 8%. And compare that to just back in 2021, when very commonly you could get 3% for a fixed rate mortgage, 30-year fixed rate mortgage. Yeah, 3%. Doesn't that sound like a good deal today? And so as these two things occur, lower stock markets, lower real estate, investors will be seeking out alternative investments. And gold is one of, traditionally gold is one of the alternative investments. In my opinion, it's the best alternative investment, along with silver, of course. And so that's one of the trends, gold as a safe haven, caused by higher interest rates, and then higher oil and energy prices. I mean, we've got analysts at this point, they're predicting $150 a barrel oil. And so you think inflation is high today. What do you think $150 a barrel oil is going to do to inflation? I mean, it's been said for years that this is reference to Saudi Arabia specifically, that Saudi Arabia needed $80 a barrel gold to support all of their liabilities as a country, and that the world economy basically slows down and ceases to function at $80 a barrel. And so, trade-off there. Well, we're already above $80 a barrel, and we've got people predicting $150 a barrel. So, interesting situation that we're in. And so anyway, higher oil and energy prices, again, suggest lower stock markets and pervasive inflation. And so, gold is historically seen as a safe haven against inflation. And as I've said, in numerous videos, in my opinion, my expectation, my bias is that we are in for years of high inflation and increasing inflation. We're not done. We haven't seen the last of inflation. Inflation is heading higher, will head higher for several years to come, in my opinion. And then a combination, inflation, stagflation, hyperinflation, all of those factors, gold is historically acts as a safe haven against all of these factors. Stagflation is the combination of inflation and a stagnant economy at the same time. And of course, wherever you want to look at this point, certainly in the West, Europe, United States, and China as well, they're having economic challenges. Germany, for example, is basically deindustrializing itself by cutting off its source of cheap natural gas. They've gone from a steady supply of cheap natural gas through pipelines from Russia, cut that off completely. They're now getting LNG primarily from the United States, and they are paying anywhere from 4 to 6 times as much for that LNG as they were for the Russian natural gas that they had prior to the sanctions. And large companies in Germany are they're shutting up shop and leaving. They have to. BASF being one of the prime examples of a long existing company that is having to shut down and move to other locations outside of Germany because they can't afford to operate there anymore because of the cost of energy. And so anyway, and then hyperinflation, understand that hyperinflation is a psychological effect. We go from inflation to hyperinflation overnight. It's not a linear trend, a gradual trend. There is no, if you looked at a chart at when did inflation turn into hyperinflation, it's a stair step. It's a step function. It's basically the people freaked out and inflation becomes hyperinflation. We saw it back during the coup, where toilet paper was gone. One day you're at the grocery store and, not aisles of toilet paper, but the aisle where the toilet paper was stocked was, full. And you pick Charmin, any number of brand names, Scott Tissue, etc. And then you go there the very next day and it's an empty shelf. And that's how hyperinflation works. It's a psychological thing. It's when the citizens realize that money no longer has value. The fiat currency that is being, what they're receiving in their paycheck is losing value quickly, so quickly that they are determined to spend it as quickly as they can. As soon as they get their fiat currency, they go spend it on something. And that's hyperinflation, is when the people are desperate to get rid of their fiat currency and trade it for anything. And so anyway, that's enough of me babbling about gold as a safe haven. These are the factors, in my opinion, that will cause gold to act in this role as a safe haven. Higher interest rates, higher oil and energy prices, and then inflation, stagflation, leading into hyperinflation. And we'll touch on that again at the end of this video when we talk about why should we buy gold now, today, hyperinflation. Let's see, gold as a rescuer of the currency and financial system. So collapse of the West, and the pace of this collapse is accelerating. The fiat currencies are already in trouble. Certainly the major currencies, US dollar, the euro, and the yen, but any of the fiat currencies you want to look at, they're in trouble and quickly headed towards their true value, which is zero. Collapse of the West, again, NATO shot themselves in the foot with their latest escapades into Ukraine. We're seeing more and more divisive behavior amongst the NATO countries. Hungary's not going along with the game. They're not supporting Project Ukraine. We've got Turkey, which has always been kind of riding the fence between East and West. Geographically, they're more aligned with the East, and yet they are a NATO member. Well, supposedly they have asked to join the BRICS nations and may be accepted as early as 2024. NATO is not going to allow Turkey to remain as a part of NATO if they join BRICS. And so we may see the first NATO country leave NATO or get kicked out of NATO as early as 2024. And the BRICS summit, that's November of 2024. And so that would be a definite step towards the demise of NATO. And of course, one of the things that's been demonstrated in spades over the last 18 months or so is that all of these vaunted NATO weapons have basically been shown to, they ain't that great. The shoulder-fired missiles are basically junk. The tanks all burn equally well. Doesn't matter whose country's tanks you want to talk about, they all burn. Anyway, enough of that. So EU has got significant problems, and largely because they cut themselves off from their cheap supply of energy, with the sanctions. And so we're seeing more divisive behavior within the EU. Again, Hungary is not playing along with the plan. Turkey just recently, in the last week or two, suggested publicly that they may be breaking away from the EU, and so anyway, there are more and more countries that are becoming less supportive of the European Union. We've got the G20 and this recent G20 meeting. I'll talk about it'll be my next video. I'll talk about all of these factors in my next video, but just wanted to touch on them in this as we're talking about gold, because this is certainly a significant factor of the gold market and gold as money. That's what I'd like to see, is gold as money. Collapse of China economically. China's got challenges. It's a huge country, 1.4 billion people, I think it is, last time I saw the number. They've got a very large shadow banking system. And so a lot of the financial stuff that happens in China spends out of this shadow banking system. Well, the government, the China government, has tried to clamp down on this shadow banking system. And so that has caused problems. And then we've got significant problems with real estate in China. Evergrande obviously defaulted and then declared bankruptcy. And then we have another large real estate developer in China that is headed down that path as well. Gold historically restores confidence, whether it's in a currency or in a financial economic system. And so one of the ways that gold is used or can be used is as a rescuer of the fiat currency or the financial system. I don't really expect this to happen. I think at best, we may see some country or perhaps BRICS introduce a gold-backed or a gold-linked currency. And let me just point out that that's exactly what the euro was supposed to be. When the euro was being introduced as a new currency, it was being sold as gold backed, 15%. The euro was going to be backed by gold, 15%. That was part of the sales job to get the European countries on board with the euro. And of course, if you go look today, all you will find about the euro is that it is a fiat currency, and that is all it has ever been. Very, very hard. I didn't go in depth, but I did search for references to the euro as a gold-backed currency and didn't find any. So in my opinion, we may see somebody try to introduce a gold-backed currency, but it'll just be a sales job. Gold-backed is bullshit. It's simply a sales pitch. Unless we get gold as money, gold exchangeable currency, it's just a sales job. And so it might restore for some brief period of time confidence in the currency or financial system until people realize that it's just a sales job. That, basically they've traded one fiat currency for another fiat currency. That's what it would be. If we got a gold-backed currency from BRICS, all we would be doing is replacing one currency, one fiat currency, or in the case of BRICS, it would be 11 fiat currencies with a gold-backed fiat currency that wasn't really backed by gold because you couldn't take that currency anywhere and exchange it for gold. It's just a sales job. And so anyway, gold can restore confidence, but long term, the only way you restore confidence with gold is if you have an exchangeable currency. You take the currency to your local bank and exchange it for physical gold and or silver. So gold as an inflation hedge, we talked about that some already. We've got oil and energy prices are rising. Again, we've got analysts predicting $150 barrel oil. Recently, Russia and Saudi Arabia agreed to extend their reduced output of oil. They had already reduced it. President Biden went in person to Saudi Arabia and asked them, pretty please, will you increase oil output so we can keep inflation down? And I got an election coming up, etc. Well, not only did Saudi Arabia not increase production, they actually reduced oil production, and Russia did as well for other reasons. And of course, now we've got the two countries extending that reduced output. Both countries are supporting higher energy prices going forward. And then recently, just in the last 2 weeks, Russia has stopped exporting gas and diesel. And of course, that's another factor that will drive up the cost of energy, because obviously gas and diesel affect everything, all aspects of transportation, whether it's you and me driving our cars to the grocery store, a diesel truck delivering goods to Walmart, or a ship out on the oceans with, jam-packed with containers full of cheap Chinese crap coming to Walmart again. gas and diesel feeds into inflation, or as the cost of gas and diesel increases, it pervasively feeds into inflation. One of the interesting aspects or reasons that Russia may be doing that is because they are stockpiling gas and diesel for an offensive. And so just interesting timing that Russia just recently stopped the exportation of gas and diesel. So what might they be stockpiling those fuels for? Here in the States, the Strategic Petroleum Reserve is down to a 20-day supply and needs to be refilled. And of course, if they try to refill it, well, that's just another source of demand for oil. And of course, the oil producers, as soon as they realize that the United States is committed to refilling the SPR, that's going to drive prices up. Higher oil prices feeds into inflation. Investors will hedge against inflation with gold. So, it's a pervasive circle there, or cycle. Food prices are rising. We've already got significant inflation. It's at least 12% by John Williams statistics. He tracks inflation using the 1980s methodology that the BLS used before they introduced all their massaging, all of the machinations that they use to make inflation look lower than it is. The BLS wants us to believe that inflation is currently at, I think, 3.5%. Well, BS. It's at least 12%. Some analysts think that it's really 25%. And then if you look at specific items, food items in particular, it's as high as 40%. So anyway, food prices are rising. This is an important factor to understand when you're talking about or thinking about food and inflation in food prices. Basically, we're eating last year's crops, whether, corn, grain, whatever you want to talk about. Obviously it's not true of fresh fruit. We're not eating last year's bananas or apples. But when you talk about corn, which goes into all produced food, processed foods, corns and everything, as our grains, basically we're eating last year's production. And so there is a time delay in food production, and therefore a time delay in the inflation. So inflation in food will hit with a time delay. We have yet to see the full inflation in food prices that has already been caused by the reduction in fertilizer output from Russia, the reduction in grain output from Ukraine. Any number of factors. The volcano, the Hunga Tunga volcano in the southern hemisphere, it injected a tremendous amount of ash and water vapor into the atmosphere. And so crop growth in the southern hemisphere has been significantly reduced by that volcano. But again, we haven't seen the effects of that reduction in food output because we're eating last year's food. So anyway, point is, food prices are going to continue rising, which feeds into inflation overall, which causes investors to run to gold as an inflation hedge historically. So did I cover all of these? Yeah, fertilizer, grain exports, volcano, food processing facilities. There's another. So I think at this point, last time I saw the count, 231 food processing plants in the United States have been destroyed by fire. And so, we won't talk on YouTube about why that is, but It's just there's been a rash of fire events at food production facilities that have caused them to close down or significantly reduce output. And then along the same lines, we could talk about I don't even know how many millions of chickens and turkeys and pigs that have been killed because of the coof, health reasons. And so we had to destroy, I think it's 15 million chickens at this point. And so anyway, food prices will continue rising, increase into inflation. Let's keep rolling. Gold as a weapon. I touched on this. So if these two countries decided that it was time to take down the West economically, they could introduce gold-backed currency. Either one of those countries or the two countries together could introduce basically back their existing currencies with gold. Russia's got at least 12,000 tons of gold. China's got as much as 30,000 tons of gold. The United States still claims that they hold 8,100 tons of gold. Many analysts believe that even if that gold still exists in the West, it has been sold and resold multiple times, that at least 3 people think that they own every ounce of gold that is held in Fort Knox or in JPM vaults in New York and elsewhere. So anyway, this is gold as a weapon. That would be these two, either one or both of these countries introducing a gold-backed currency. And so we need to understand, I don't want to go too much in depth into this aspect. Saudi Arabia plays into that as well because, Saudi Arabia and their oil production currently backs the petrodollar, which backs the US dollar as the world's reserve currency. And so Saudi Arabia could go along with Russia and China in this weaponization of gold, and that would that would really put the world, the Western world, in a world of hurt, in the hurt locker, to use a sports analogy. And we also have to keep in mind that as of January 2024, which is 2 months from now, the BRICS organization will have the 6 new countries join. And at that point, BRICS controls 80% of the world's oil production, which, Saudi Arabia is in there. And so if the BRICS countries decide that they want to hurt the West economically, they are in a very strong position to do so. Let's keep rolling. Looks like that was my last slide. If we go back to the 2 topics I wanted to talk about in this video, the second one was why buy gold and silver today? Well, it flows out of everything that we've talked about. It's a hedge against inflation. It's a hedge against economic collapse. Hyperinflation in particular, as I said multiple times, it's a psychological event. It doesn't happen in a linear, there is no linear curve, geometric equation that you could apply. And so this is the point at which inflation becomes hyperinflation. That's not how hyperinflation works. Hyperinflation is a psychological thing. It's the people deciding or realizing that the fiat currency they're getting paid in or have in their bank or have their investments in, if your investments, whatever they're denominated in the US dollar, you're essentially holding US dollars through your investments. When the people realize that those dollars are losing value quickly, they decide suddenly to get out of those US dollars. And that's when hyperinflation occurs. And again, it's an overnight phenomena. And so if you think, well, I can wait a while to buy gold, I can wait a while to buy silver, I don't need to protect my IRA, my 401k, my TSP, my 457, my 403b, whatever kind of retirement, my annuity, my pension plan, whatever retirement program you're in with your tax advantaged savings, you think you can wait to protect them until it becomes obvious that you need to protect them. And the point I'm trying to make is that, well, no, you can't wait, because hyperinflation is psychological. It's going to happen like that. It's one day there's toilet paper on the shelf, and the next day you go there and the shelves are bare. That's what will happen, in my opinion, with gold and silver. It's available today and it's cheap. Premiums are low. Premiums are the lowest they've been in a long, long time. And there's a ready supply of both gold and silver. Even junk silver is available. And if you're buying silver, buy some junk silver. That would part of my recommendation for investing in the precious metals. Start with some junk silver. If we do return to physical silver and gold as money, what we will be exchanging first, in my opinion, will be junk silver. It will be the 1963 and prior silver dimes, quarters, half dollars, and dollars that were produced as real U.S. money back in the day, 1963 and prior. And so right now, junk silver is available. I won't go so far as to say it's readily available. A couple of $1 million, you'd probably wipe out the readily available supply of junk silver. But anyway, this is a new phenomena in gold, physical gold. It's now available from Costco. And I'm not sure yet what to think about this, but it's an indication that gold, the idea of buying and holding physical gold, is becoming mainstream again. The fact that Costco is selling physical gold, it's a little bit mind-blowing. And from what I understand, anything they put on the shelves is immediately gone. They can't keep it in supply. And so interesting that people are buying physical gold from Costco at this point. Now, I always recommend that for physical gold, take cash out of your bank, take it to the local coin dealer, and buy physical silver and gold. There's no record in that scenario, no record of you buying physical precious metals. You're using cash that you withdrew from the bank. You're buying physical at your local coin dealer. There's no record made of it. You go to Costco and you're buying gold and you're using your credit card and you've got a membership. At Costco, you have a membership. So any gold you buy is clearly tied to your membership. Same thing if you go to one of the online brokers, JM Bullion, APMEX, any of the online brokers. Again, there will be a record of you buying physical precious metals, even though you take direct ownership of it and store it, bury it in your garden, put it in your safe, wherever you feel, comfortable storing your physical. There will be a record that you bought physical. So get cash out of the bank, go to your local coin dealer, buy physical, no records. With your tax-advantaged retirement accounts, the IRS doesn't give you much options. Basically, the only thing you can do there, and it is the only way to protect those retirement accounts with physical precious metals, is by opening a precious metals IRA. You transfer money out of your existing retirement account into your precious metals IRA, and then you buy physical and store it in your precious metals IRA. Now, the IRS requires that a third-party custodian holds that metal, you can't take direct ownership of it. And so that is a drawback to precious metals IRAs. But having your tax advantage savings in physical gold, you are at least in a better position than you would be having that same money in mutual funds, individual stocks, whatever form your tax advantaged retirement accounts are in currently. So in the description below this video, you'll find a link to Augusta Precious Metals. If you'd like to learn more about precious metals IRAs, that's my first choice for companies to work with. They'll take good care of you. They'll provide you with an information kit. They'll connect you with a representative who can answer your questions. They won't pressure you. They'll work with you for as long as you want. They'll help you through the process of discovering whether a precious metals IRA makes sense for your particular circumstances, given your investments, your tolerance for risks, etc. So that's all I've got. I haven't been watching the time. I've probably gone on for far too long. I'm going to end at this point. In my next video, I will be talking about, I'm going to expand on the multiple ways that the Western systems organizations are collapsing, and G20 meeting just being one of them. Kind of fun. Some of the stuff that happened at the G20, kind of fun to look at. So anyway, talk to you soon, folks. Have a fantastic rest of the weekend and the week going forward. See you soon.